Karen Houghton raised $500,000, and the first investor in the round was David Cumming. How close was that initial pitch that raised that $500,000 to what really happened 4 years later? That's what this podcast is all about. Enjoy. Welcome to the Charlie Paparelli Show. I'm Charlie Paparelli. Today's guest is Carol Houghton, founder and CEO of Infinite Giving, a for-profit serving nonprofits. She's in the finance end of the business. Today's episode, I'm entitling From Idea to Reality, What You Learn Once You Start. As general manager of Atlanta Tech Village, Karen was surrounded by hundreds of entrepreneurs. She saw lots of startups start and fail. She saw some others just stall, and she saw a few become billion-dollar companies. She served them all, and she has seen it all. Then one day she asked, what about me? Today's conversation is focused on how Karen went from idea to funding to start. Then from start to becoming a real company, serving a real market, and making a real impact. Karen was the first general manager of Atlanta Tech Village, and that's where we met. She built a world-class team that helped make David Cummings' vision for the Atlanta Tech Village become what I think was a spectacular reality. Karen created an environment where we all wanted to become a part of ATV. It was just the place to be in Atlanta for startups. And to this day, I stand in awe of the culture that Karen created within the startup community of Atlanta. Karen is a unique cat in that she embodies both great leadership, but also she's a great manager. And those two elements are rare to find in the same person, particularly in the startup community. So it's just a pleasure that Karen has joined us here today. And here's what we're going to discuss. I've got 5 areas that we're going to hit on. One is we're going to talk about her company. We're going to talk about her start, going from, okay, now it's time, her pitch and what that was way back then, and her pivot maybe, things that she's learned, and then her ultimate success and where they are today after 4 years in business. So let's get started. So welcome, Karen. Thanks for joining me.
Hey, Charlie. That was a very sweet and kind and generous kind of lead into the story. I loved my days at Atlanta Tech Village, so it was fun to revisit that through your eyes.
I don't think I'll ever forget those days. I was coming.
Special.
It wasn't the end of my career, but, I had seen a lot of startup incubator type situations. And I just didn't realize, there's so many eyes are focused on the creator and founder of the incubator. But that day to day and the culture you created around that, the people that you hired, it made it such a wonderful environment to be in. Always capable people and always there to serve the entrepreneurs in any capacity that they possibly could. So unique.
Yeah, you always want to create a community where people want to be, and people want to be in places where where they are known and valued. Right. And so I think even though it's a tech hub and David had this huge vision, and I still remember like touring the unrenovated 1986 building, and he was telling me about this vision, and it was the ugliest building, like had not been touched since 1986. But I was like, this vision is amazing. And I was like, I think this is something I want to be a part of. And I think that early team, we all figured it out as we were building the plane as we were flying it and learned a lot. But I feel like even those early members of the community, like it was a really special time for us to come together in this special place of innovation built for entrepreneurs by entrepreneurs, and then really being able to be like, let's scale and pour into this community in a way where we can all have great success. And I think we did. It's still right. Atlanta Tech Village is still growing. We still have an office there. I would not have an office anywhere else other than Tech Village.
What did you bring those values? What were the values that you said for a successful community? You have to have what?
I was just chatting there, but I think I said
You said people have to be people want
they
to be
want to be
recognized,
known, right?
known. Yeah.
So they need to be known and they need to know that there's value in their presence and being there, right? And I think sometimes when you think about like people are like, oh, tech hubs. I'm like, we're a tech hub, but it was also a community. And you have to build relationships in a way that people want to be in relationship, right? In order for that to work. And I think sometimes that is not just like, hey, here's an office, here's a desk chair, here's resources. It's also stopping people in the halls and saying, how are you? Like, what challenge are you facing? How can I be helpful to you? Hey, I met this other person and I think this person could create value for you. And I think even now in what we're doing with Infinite Giving, there's a lot of, yes, we're tech and we're finance, but we also are relational, right? It's like, hey, we want to get to know the people behind the work, behind the organization, so that the more we understand and support them, the better we can serve them and the better our platform will ultimately be as well.
Okay. One last question on ATV, and then we'll jump into infinite giving. Is so? Did you bring that understanding about community to to ATV, or was that something that you learned as you started to incorporate or try to make David's vision a reality for it becoming a startup hub?
It's a good question. I mean, David was always very clear like, here are our core values: be nice, dream big, pay it forward. So that was a really strong foundation. But then, if you have values, but you don't talk about them or live them out, then there's a discrepancy. So we made sure that they were everywhere and that we were living it out and that we were talking about it, right? I always say with your core values, if you don't say it until you're tired of hearing yourself say it, you're not saying it enough because it requires, right?
Yeah, but
Just
his core
repetition.
values don't. You translated those into what you just talked about.
So I would say I come from a ministry background, right? I was a young life leader for years. And in young life, it is a ministry where you build relationships with high schoolers, right? And you earn the right to be heard, you share your faith, you love them no matter their response, and you do life with them. And I think that I brought a very kind of what my young life kind of ministry approach to the
Okay.
tech community, which is probably why it felt different. And people were like, what is happening? But for me, it felt like a very tangible way where we could relate to others in a way that was meaningful.
Well, you did it. I mean, it had an impact on me, and I didn't know anything about your young life background. I just
Mhm.
knew what was happening at ATV in those early days. And I too took a tour. Johnson Cook took
Yeah.
me around when the place was in shambles. And I had been in that building before to see the owner of the Atlanta Business Chronicle, who was on the
Mhm.
12th floor. And
Yes.
it was a pretty dingy kind of a building that lacked light. Okay.
Very dark. Yes.
And it was hard to get into, and it was just crazy. But you guys did amazing job, amazing job. We need to get to infinite giving. So here you are, you're watching all that's going on, all of these entrepreneurs, and it's hard not to catch those germs from all of that excitement that goes on in starting a company. But you did start a company called Infinite Giving. Let's just start with what is Infinite Giving, and then we'll get to the more of the beginnings of infinite giving. But let's not
Yeah.
keep people on edge.
Yeah, Infinite Giving is a financial technology company that serves growing nonprofits. So we are a fiduciary partner who comes alongside small to mid-sized nonprofits and helps them raise money, manage the cash donations, and then also conservatively invest and grow. So we're a fiduciary partner on the financial transaction side.
Wow. So you also, but what was unusual, the other pieces I understood, but the first one really helped them raise money. That really that surprises me.
Yeah, it's our SaaS product, right? A lot of people listen to this are come from the entrepreneur world. So we have a SaaS product, a transact like our business model is SaaS product, transaction model, and an AUM fee, which is assets under management on the financial side. So we have three revenue streams, but the donation page handles credit, debit, ACH, Google Pay, Apple Pay, Cash App, all of those. But kind of
Okay.
our unique value prop is that in addition to those types of giving, we also handle stocks, cryptocurrency, donor advised funds, and endowment gifts.
So you're not really helping them raise money. You're reducing the friction for those for when they
We're
do
giving them
raise
the
money.
tool and the access to bring in those larger size
I got it.
gifts.
Okay. Make it easy for people to give the money.
Yes,
Yeah, okay.
because most 90% of nonprofits don't have the ability to accept a stock gift.
Yeah, I guess I got confused when you say we help them raise money. I was like, "Oh my god, so she's
Yeah,
getting involved with these
I guess
nonprofits and
I
she's
just say
trying to
we
find
help.
them donors?" That's not what you're doing.
No, I was
Okay, good, okay.
wait. We help them receive donations.
Well, from somebody I deal with a lot of nonprofits, and I have over the years as a donor, and all you have to do to tell them is that I'm gonna help you raise money, and they just, like, are all over that.
Hmm.
You'll come with me or you'll have a dessert at your house, a dessert and coffee, you'll do whatever for us to raise money. That's not what you're doing.
No, but we do provide a lot of guidance on non-cash gifts. We give marketing packs and language of like, here's how you ask for stocks. Here's why it's important. Here's the tax
Okay.
efficiencies. We set up endowments. And so that is a lot of tools that we can give to nonprofit leaders. Here's ways you can talk to your donors about it. Occasionally I'll even join a donor meeting on behalf of the client with them when we're talking about, we had somebody set up an endowment and they wanted to fund it via a wire transfer, stocks, crypto, and a donor advised fund. All of those were going to fund the endowment. You know what? Then they were using our platform. And so they were like, Karen, can we just connect you with them and talk them through it? And I was like, sure. You want to know what the hardest piece of that entire endowment was? The wire transfer. Because he had to physically go inside of his bank. And the bank was like, trying to figure out and calling us and he was like, why is all this other stuff was so easy? And we were like, that's because that's our platform, like we've built to serve folks like you all, so then the organization itself could benefit from that large gift.
Yeah. There's a lot of security around that. And you're right, wire transfers, that's a whole nother
Oh
deal.
yeah, we are in a very compliance heavy industry.
Absolutely. Absolutely. So, okay, so that's what Infinite Giving does. You've been in business for 4 years. So roll back, a little over 4 years ago, maybe a lot more than 4 years ago. I don't know, but I'm interested in know, where did the idea for Infinite Giving come from?
It's a good question.
You're a general manager of ATV. You're doing all this and you're helping all these other entrepreneurs. Where all of a sudden did this come from?
Yeah, well, for those who are familiar at Atlanta Tech Village, we did a lot of programs for underrepresented founders. And that was something I was really passionate about we started our It Takes a Village pre-accelerator program. At the time, I eventually was a venture partner with Atlanta Ventures. So I was trying to do a lot of deal flow to Atlanta
Help me out
Ventures.
with this. You used the term underrepresented founders.
Yes,
I don't know what that meant, and I'm stuck with that. Maybe others can.
females and people of color.
Okay. So the majority of founders are white guys.
Yeah, I think already in the last 10 years, it's certainly started to shift. But when you even look at venture capital, I mean, less than 2% of women get the venture funding, less than 1% are in financial technology. So
Okay, so
you
tell
are
me again.
talking to
Tell
less
so
than 1%.
start again. I got stuck on that. So
Okay.
start again. Telling me about how this underrepresented founders folds into this. Where did your idea come from?
Yeah. All that to be said is we were building a lot of these programs. We saw Atlanta Tech Village slowly shift. Ellie Merritt today is doing a great job of just slowly shifting to make sure that ATV also represents the city of Atlanta and the community that we're in. And so in that, I think I was just exposed to a lot of lack of opportunity that maybe female founders understood that they had. And I would be speaking with a lot of them and just being like, hey, you should go start a business. And then eventually I feel like God was also saying, Karen, you should go start a business.
What were your thoughts when they would say that when you first started hearing that?
I'm pro anyone who wants to start a business. It doesn't mean everyone should. It doesn't mean it's the right skill set or timing or risk profile for everybody. But I think if that is,
Yeah, but what about you? Like, I get that. That
I
was
mean,
why you were so great as a general manager. You encouraged everybody to start a business. But did you come there thinking, oh, someday I'll start a business?
I did not. I had founded a nonprofit before I started working with David. So I was
Okay.
the founder and executive director of a nonprofit. And so I had done the build, something from nothing. And then when I got exposed to the tech community, the way nonprofits think about money and the way the tech community thinks about money are incredibly different. And my eyes, I was just like, what is this world that I'm in? And it's not better and it's not easier. It's
What's the
just different.
difference? I mean, it begs the question then. Oh, it was so different. Well, what's so different?
Yeah. I mean, nonprofits
Between a
operate from
for-profit and the way they think about money and the nonprofit and how they think about money, right? Okay, so
I
what's
mean,
different?
nonprofits operate from a scarcity mindset, and it's a level of there's a lot of fear and thoughtfulness and even more conservative because you have to steward these funds really well. So
Hmm,
often it's quite limiting. Also, the way they can access funds and the banking opportunities and all of that that they have are very limited. And
okay.
then when you get to startup founders, I mean, we're not talking about $100 donations on the website. We're talking about millions of dollars of funding and growing ARR and valuations. Like you started out this conversation with, we saw companies valued in the billions. And that's true. You don't hear the B word a lot in nonprofits, like talking about billions of dollars. So I think there's just an area there. But long story short is I'd already been a founder of an organization and ran that. And
You
then,
said something that's really interesting, though, and it's the so nonprofits, the way they look at money is they have a scarcity mindset, and they are very diligent and feel responsible for donor money. So it's not their money; it's donor money.
right.
That's exactly what I would hope as an angel investor. When I invest in people's companies, do they think of it as their money, now that the money's in their account, okay, that the company's account, or do they think about it as really shareholder money? And I have to really be diligent with the shareholder money. I don't know that that's always the case.
While also donations are raised and typically given for impact, investors are usually giving money for returns. So I
Yeah.
think the element of that difference there is that depending on your company, depending on your investors and your growth strategy, it is often like go big or go home, right? Like how quick can you scale? It's about speed, it's about how big the market is. Nonprofits are not worrying about that. They're thinking about what problem am I solving, usually pretty deep in their community. These, of course, are generalizations, but I think as an industry, they're quite
The
different.
generalization, almost stereotypes, but they're true. They are
There's
true.
truth to
Yeah. So
them.
those are good insights. Okay. So you started a nonprofit, and then you get in and you're dealing with hundreds of for-profits and serving them, right?
Mhm. Mhm.
Okay, so where does this idea come from?
Yeah, I
And then people are saying, "Oh, you're really good at this. You should really start your own company."
yeah, and I had David was the right person for me to be working with, and when I expressed interest in that, he was like, "Great, what are you going to build?" I was like, I'm still figuring that out. But I was like, I can build a great company. And I knew that I could. And I'm so absolutely, I'm like, I'm doing what God intended me to do. I'm made to do this. So it's an interesting kind of element when it was like, I had that calling and I had all of this experience now because now I had an almost 10-year career in tech, a little bit in finance in BC, had already ran a nonprofit, been a fundraiser. And then in that 10-year career, I started serving a lot of nonprofit boards, right? And so
When did you before you go there, I'm sorry to interrupt again, but you said something that's really important. It's I just knew this is something I needed to do. And it sounded like it's something that you needed to do. I always because I think a lot of people wrestle with, you know, am I supposed to be an entrepreneur
mhm,
or should I be an entrepreneur? Those two different things.
they are.
Because if you're supposed to be, you get that message, from God, or you get it through your intuition if you're not, faithful, if you will. When did that really happen to you? Because you said it did happen to you, that you just knew. Do you remember when that happened? How early in your life?
I did not think and was not exposed to being a tech entrepreneur until my work at ATV.
Okay.
So that was just, I was more like ministry and nonprofit. And like, even when David hired me at Pardot, it was to do a corporate social responsibility program.
Okay.
Right. And so I made a very bizarre leap from nonprofits to the for profit tech world. And I think it's being exposed for so many years, meeting entrepreneurs, there's sometimes a mystique around like it's a bit, but once you know them, I'm like, they are flawed humans, just like the rest of us, that have big ideas and big visions and are willing to take on risk. But with greater risk comes greater failure and greater reward.
Yeah.
And so I think walking alongside so many entrepreneurs, many really good, smart people where it didn't work out, and many great, smart people where it did work out, but it always required a little bit of luck. Right. And so I think there's all of these elements that I became convinced that it was something that I could do. And so then the question is, if I'm going to do this, what is the idea I'm going to pursue?
Huh,
And
okay.
I spent about a year and a half thinking through different ideas and doing customer discovery on different ideas. And it was a long time. And we went down the path of like other ideas. Like there was a good friend who had a great idea, and we got some money and we were building wireframes and we had it. And then I just had this nagging in my spirit where I was like, I don't know if I'm the person that's meant to build that. It was a little bit of a founder problem fit issue. And then it was also, I
That's
just
the problem, though, when ideas come from the outside to you as opposed from the inside of you out.
I was on a call the other day and I was like, the idea is often the hardest bit. And I had somebody, they were like, what? Ideas are a dime a dozen. Ideas are the easiest bit. It's the execution. And I'm like, I think we're both right in that of course it's the execution. We can all have great big ideas, and the execution is where it's like, you know, the rubber hits the road of like, can you make it happen or not? And persistence and perseverance and grit and all of that. But the idea is also like, is there a market? Is there a big enough market? Will people pay for it? There's a lot of great ideas that cannot be
Yeah,
businesses.
but we're talking about something a little bit different. The difference is it as the founder or as the entrepreneur, the difference between my idea and you as my friend, your idea for me. There's my idea and then your idea. Okay. And so this is where, you've got some people come to you with ideas, but they weren't
They were
your
good
ideas.
ideas, but
Okay.
they weren't right for me.
They weren't your ideas.
And then I had some ideas, but then the market wasn't big enough, or
Okay. Great.
you know what I
Okay.
mean? Or it's like, oh, there's some people already in the space. Is it as innovative as I might have thought it was? Or is it a, vitamin or a painkiller? Is it a nice to have or is it a need to have? And David, as I was talking to him, he kept pushing me towards some nonprofits because he was like, you have this background.
Yeah.
So long
Good for
story
him.
short, as I kept looking at, all right, for a founder fit of the idea that I am going to solve or feel called to attempt to solve and build a company around, looking at like, what is my expertise? And at this point, I'd sat on multiple nonprofit boards. I'd been a fundraiser and executive director, and now I'd been around money and venture capital and looking at finance and running, a $5 million a year budget at ATV for years, where we were successful every year. So I think there's a lot of these elements that I was like, wow, I'm really uniquely positioned to look into this financial side of nonprofits. And if you're not in that world, you're like, what are you talking about? Banks, everything's there. There's no problems.
Yeah.
If you're in the nonprofit world, there's actually multiple pain points that nonprofits experience that business and retail clients simply don't. There's a lot of complex compliance requirements that provide a lot of
We're
limitation.
going to get to that. We're going to get to that. Hold on, another thought. Okay.
Okay,
I don't want to skip this idea. You said the most important thing is the idea, and somebody said, no, 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 it's execution.
I think it's
It
both.
is, but it is serial here. You can't execute on no idea. Okay. So you got to have the idea, and it is. You're both right. I agree with that. But I think driving this point home is I'm a believer, and I just want your reaction. I'm a believer that in order for an entrepreneur to dedicate one's life to the idea, it has to be his or her idea. That I can't have something float in and that it's somebody else's. And it is a good idea because it's almost like I'm a hired CEO. You see what I mean? But when it's my idea, it's like stuck to my DNA. I can't seem to get rid of it. Is that true? Is that something that you found in this journey you've been on?
I think the majority of the time that is probably true. There are studio models where the studios, where the studio has a list of ideas, or they have, done some customer discovery, and an entrepreneur who's having trouble finding the right idea can go look through these lists of things and then pick what feels right to them. What I do think is a hill that everyone should die on is like, if it's not the right fit for you to build, do you have a deep understanding of the problem that you're solving? That's what's most important.
Really? So not only is it got to be an idea that is a good idea, but for me, as someone adopting it in a studio type environment, is that something I can add a lot of value to immediately? Not, oh, yeah, I could learn all about this. No, now. What can you bring now? That's
Yeah.
a great insight.
I mean, if you ask 10 people, you'll probably get 10 different opinions, but I think that familiarity,
I
and
don't
even
think
though,
10 people who know this industry, anybody who's been in startups long enough, I think you're hitting on this is one of the truths.
yeah, and it's so even though then I fell on this idea, right? We did a lot of customer discovery. I did a lot of customer discovery, meaning I did 100 customer interviews.
And were you
We,
doing this while you're still working for David? You're still running ATV.
mhm,
Okay, go ahead.
yeah, and
Because
so
that's my next question is when did you get to the point where you said, "Okay, I quit my job. I'm doing this now." Okay.
well, the
But
fun
see, I don't want you to get I want you that's where you can go to next in
yeah,
this explanation that you're going through here.
the fun part of this story is that I didn't quit. David was like, "Great, here's your last day." Because we were talking about it. It was all open. He was very supportive, and I'm a pretty candid, transparent person. And so I was like, "Look, I want to do this." And I'm like, "Here's this idea." He's like, "What about the market?" I'm like, "You're right. The market's not big enough." All right, now I'm landing on this idea. Then I did all this customer discovery, and I am very type A, and so I made 100, interview commitment. Most people will do 20 or 30 or 50, but I was like, I'm going to do 100 because I want to be really sure, right? I started the company in my fees. Like I'm not a 20 something, right? So I, wanted to sit there and be really intentional about knowing the problem we were going to solve.
Well, you do just customer discovery, the thing that when I started looking into that whole customer discovery thing, we typically do the wrong things, right? We say, if you had this, isn't this something you need? That's not customer discovery. We're just having we want people to say yes, and yeses are cheap, right? They don't mean much. So when you said you're going to do customer discovery, and even if you're thinking 30 to 40, in your case, 100, tell me how you approach that. I mean, to find 100 people that will talk to you in the nonprofit world, I would have trouble beyond 10 right now. Okay. And you're talked to 100, and I've been around a lot longer than you have. So tell me how you approached it.
I knew a lot of people. So I did have a pretty wide expanse, and it was a lot of just using personal relational equity of saying, "Hey, do you know anyone in here? Do you know anyone here? Can you make an introduction? I'm looking to talk to I'm looking to talk to nonprofit leaders, people in a tax exempt space."
Good. So
The
you
thing
used your
about tax
network to come up with a
exempt,
list.
yes.
Okay. Then
Anybody doing
what are you trying to accomplish then? What's
Yeah,
next?
anybody doing this should read the mom test. It's a horrible name for a book, but
Well,
it,
it's written for the 2% you're talking about, right?
it's not though, but it makes it feel gender specific because the name, which I'm like, but the
Okay.
whole premise of the
The
book
mom test.
how to do proper customer discovery where you're not asking leading questions, you're asking open-ended questions, and that way
Okay,
you're
good.
really discovering without you're trying to unbias the interview as much as possible. But I
Uh-huh.
was just doing, 20-minute interviews, and I would do that as much as I could. And whenever I did one, I'd ask, do they have anybody else that I could talk to? And it took a lot of time, but I would say towards the end of that, I still did it all the way until even as we started building to get to my 100, I kept doing that. But once I was pretty convinced that this is what,
But now that I know what business that you're in, tell me, give me sort of a sample of how you did an interview.
gosh, this is like 4 years ago.
You could remember. Come on.
Where are your finances? Do you
Okay.
have cash reserves? Do you have extra money in the bank? How are you thinking about it? If you could do something else with it, would you want to? What would that look like? Have you ever considered an endowment? Why or why not? Do you receive stock gifts? Why or why not? What are the pain points that you experience in that? As a nonprofit leader, if you could wave a magic wand in the financial world, what would you change? So open-ended questions that ideally you get enough data points that show patterns of problems that you can solve.
Okay, so that's what the objective is open. You said that really well. open-ended questions that show patterns of problems that you can solve.
Yes.
Okay. Is that clearly outlined in the mom's test?
The mom test. I mean, yeah, it talks a lot about making sure you are not asking biased questions.
Because I think the way I would say that is
Ask friends.
you're
Yeah.
coming in as really a consultant in effect. And a consultant comes in and just says, well, I just want to know about your business.
Hmm.
What's working, what's not, how does it work, what keeps you up at night, those kind of a things. And that really is customer discovery. And as an entrepreneur, though, we want to come in and say, we solve all those problems. Let me tell you about what I do, right? And it cuts the conversation short and cuts the interview short, and you learn very little at that point. So
Yeah.
that's
Well,
good.
at that
Okay.
point, you're selling. And if you're doing that, you're probably not selling well, right? It's very different than customer discovery. So, because at this point, you don't have all the answers. You have a hypothesis in your brain of what you think would the world could use. So the idea is you're asking open-ended questions and doing enough research about who the competitive landscape is, or if they're like, oh, we don't have that problem. You're like, great, tell me how it goes. And then as they start talking through that, you're actually identifying multiple pain points. And you're like, is that a pain point? And they're like, oh, I hate that. I'm like, great, you said you had no problems, but now you're also telling me there's pain points. So it's just like peeling an
Well,
onion.
what about the solution side of this, the hypothesis? You said that the entrepreneur has a hypothesis. You had an hypothesis of what you thought was their issues or were their problems that needed to be addressed. Do you share that with them during customer discovery, or are you just basically in pure customer discovery?
I'm sure I did to some people, right? But at the very end, right? You're like, thank you so much for answering the questions. Others, you would just stop there. Some who are like, no, I really want to know, like, what are you doing? And I'm like, well, we're thinking something in this, realm.
Okay.
What do you think? And when you ask that, then you get like, oh, well, yeah, that, if you,
Of course they want it, right? Yeah, we need that. That's a great thing, right? But you can't overvalue that. So what is then tell me about the day that David told you about your last day.
I should totally
And
read.
how long did it take? So you're talking to David, you should start a business, all this kind of, and then you go through these idea phases, you go through this very intense customer discovery. How long did that take before that meeting with David?
I was probably actively, gosh, this is going to be a rough estimate, but I was probably actively doing customer discovery on my own time. I was probably 3 months in.
Okay, so 90 days, and every day you're closer and closer and closer and more bought in emotionally, right? So you go from passion to commitment at this point. So then you go to David and he's kind of coaching you, right? He's saying, "Tell me what you learned, what's going on, where are you?"
Yeah,
What happened that day that you sat down and he told you about your day?
if I remember correctly, I was like, hey, here's where we're landing. Here's what I'm thinking. And I believe I asked for 6 months. I believe I said, hey, I want to give notice. Like, I know I'm doing all these things. There was a lot going on. We'd seen, Atlanta Tech Village through COVID, which was an incredibly difficult time. We were rebounding. Like, I wanted to leave. I have a deep love for that community and that place. And so I wanted to leave it in really good in a really good place with a really good team and trying to figure that out. And so I was like, hey, let's talk runway. I would like your blessing. I would like to do this, which means I will be rolling off. I can do this part time. Like maybe we do this and then stair step it, blah, blah, blah. And he was like, I think your last day should be, I think it was like April 15th or something,
That's
which
how
was in
far
like,
away.
it was like 3 weeks away or something. Maybe he gave me a month. I don't remember, but it was definitely pushing me out of the nest. He was like, if you're going to do it, you need to do it full time and just go do it. And I was like, well, hold on. Because all of a sudden it became really real. And then when you're like, great, no salary, like, what does this look like? And so, of course, had conversations at home. Like, luckily, we have a dual income household, but, it's what
How
sacrifices.
did you leave that meeting? He said, okay, so it's April 15th, which is, let's say,
I
three
said,
weeks.
okay.
You did.
And then I went home and I was like, hey, husband, how do we feel about me not making money for, the first couple of years, right? Because it's never an overnight success. But,
You never had that conversation with him with your husband prior to that?
yeah, we had, but we were thinking more 6 months. And I was like, great, it's a month, surprise. But he knew what I was doing. So that was in full
Okay,
conversation.
so when David and you had this conversation, was okay, it's one thing to say, okay, you're going to do this full time. Like if David wasn't involved with you and you were talking to some other boss that you would just happen to be working for, and the guy said, well, look, you're not in this anymore. You're running our company, but you're not running it well because this is where your passion is now. And look, you're gone in a month. Okay. Then you're really cut loose. Okay. That's the way the world, because it's like, oh, now I'm flat footed. I mean, there are no funds. I don't know anybody. I didn't raise any money. I didn't do anything, but it was different for you. Okay. So as part of that conversation with David, did he say, I will, once you leave here, let's talk about how you'll raise money. Did that conversation come up with him to kind of soften the blow a bit? So that,
No, I don't think it did.
I mean, he was like any other employee. It was just, okay.
I mean, David he is the most kind, supportive, but very like go and do. Like he's available, but he's not actively guiding. You know what I mean? Like,
And so then what did you do? You leave there and you got 4 weeks and then you're going to have no income.
well,
Okay.
my husband and I were like, how do we allocate? What do we drain our savings? We do this over here. I defined a co-founder, I defined a CTO, and then I built a deck. I got our brand.
All in the 4 weeks?
Yeah, I built a deck. I started
Okay.
fundraising. I will say, I think that because I had so much data and I'd done so many interviews, and because I chose a good founder fit startup, that gave me a lot of ability. I built our first website. Like I did all of that on my own. And then from there, I started fundraising with the idea of, what we're building requires engineering and I'm a non-technical founder. So we have to fundraise to build. And then I approached David after that with my formal presentation, right? And my pitch deck. And I was like, here, would you be
So
interested?
then you went from employer to entrepreneur,
Mhm.
potential investor.
Mhm.
That's how the meeting kind of
Yeah.
changed. But were you already gone by then?
The majority of our funding did not come from David.
I know that.
He was our first check-in, which was incredibly helpful.
But yeah, I mean, that's an endorsement. That is wonderful. But that all happened after you left. Okay. So I go through this sort of a 5-step process, and I'm going to talk this. I'd like to talk about your pitch for infinite giving. Okay. And one of the things is we say is like, who will you serve? Okay. So when you think through your pitch, I'd like to answer some questions, and I'll give you the questions ahead of time, but you can discuss these in any sequence that you want, or whatever your pitch was, if you can remember back to that pitch. And I want you to stick to your pitch because
Wait, my original pitch?
I want your ideas from that original pitch. Okay.
Okay.
You've learned a whole lot since that original pitch.
Pivoted, yeah.
Okay. So I want you to kind of, this discussion that we're about to have, to go back to that original pitch, because here's what I want to do is let's go through. I've got these 5 criteria that I go through as an angel investor. Okay. Looking at this. And then I want to come back and say 4 years later, let's go through those very same 5 criteria.
Okay.
And I
And
just,
I would like to let everyone know that I tried to get Charlie Pepperelli to invest in me, and he told me no.
did you really?
I totally sent you my deck. You were very kind, but you were a no. Okay, Charlie, we go way back.
Yeah, we do go way back. It wasn't my space. It was kind of a scary space. I mean, when you're talking about a for-profit selling to nonprofits,
It's not for everybody, and
it's a tough one.
that's okay, right? The majority of entrepreneurs who raise money, you get a lot of no's before you get your yeses. And we've been able to raise a lot of funds, which has been quite helpful.
It's funny, I think of the two places that I said no's like that. One was with you I remember that, here you are, for profit going to sell to nonprofits. Okay. And then the other one was an opportunity to get into what would have been the gambling business, and I said, I just can't,
Hmm.
from a faith standpoint, a core value standpoint, I just can't get there. And I was sure it was
Wait
going
for
to
the
be very.
gambling, not for us.
No, I'm saying that these are two though, but
Yeah,
one, you were the for-profit selling to nonprofits, and I went, I don't know, man, can't get comfortable with that. And then the other one was the a gambling business.
But
Okay.
every service provider that nonprofits use is for profit.
Yeah, I didn't think deep enough on it. Okay. I'll give you that.
Hey, great product.
We don't have to hit me with the shovel here on this one. All right. Just,
No, I think I think you're amazing. I think I threw that out there just because it's fun, right? It's fun for people watching to be like, look, like no's are not a personal no. I think because there are a lot of no's, but I think that when you're asking somebody for a first check into an ideation, pre-revenue, pre-product startup is very, very risky, right? Like, and that is not for everybody. It's not for the majority of investors. Usually it's like, once you have revenue and you got a product, you got happy customers, it becomes a whole different angel investment
oh
opportunity.
my God.
So a
Yeah.
lot of people are like, oh, pre-product ideation. And I'm like, yeah, that is hard. That's about the founder. That is about the idea. That's about the market.
And also ideation for a non-technical founder. That's another
Mhm.
level of depth. Okay.
I
That's
had
very
a
difficult.
co-founder and CTO about a month in, but I had already raised the money. I raised $500,000 to build, and then I got
Wow.
our CTO.
That's great. Well, let's get into the pitch deck that
Okay.
actually
Yeah.
raised it. So, here's this question. Here's what I kind of look for in a pitch is I'm going to say like, who, who do you serve? Okay. So who's the market? Okay. Then what is the problem in the market? Salute what, and then thirdly is what's the solution? Who will pay and what will they pay for this solution? And then lastly, so what's the economic model? How does this business make money? Okay, so I kind of go through that, and all decks have it in there somewhere in the pitch deck. But I don't know what your sequence was, but I'm sure you slaved over this pitch deck, having seen a lot of pitches. So cover it. If you just cover your pitch deck, we'll cover all these items. Okay, but this is how I do it.
Yeah. All right, Charlie, you didn't prep me for any of this. And we're taught this is like, as any entrepreneur know, this is how so many iterations ago. But you're asking me about the market, if I remember
Yeah.
correctly. So okay, so market is right when you look at your massive market, we have 1.9 million nonprofits. They have over $2 trillion in securities and savings,
Okay.
right? Massive market. And then when you look at, small to mid-sized nonprofits, it is still a $530 billion market. That is what nonprofits have in securities and savings for those who are between the $500,000 and $25 million mark. And so that is a huge market that we could address
And
in tech.
that's middle market.
That's
Because even
so you
500,000
have
is
$2
a big
trillion like
nonprofit, right?
total addressable markets, 2 trillion, right? But then your mid market and your kind of really where you can target was about a $530 billion market.
Right. But when you talk at the bottom end of that middle market is $500,000, right? In what we'll call revenue or donations.
Well, in securities and savings, right? Nonprofits, IRS data, it's all available. So we were saying nonprofits who have between $500,000 and 25 millions in securities and
My
savings.
point was going to be is even at $500,000, that is a large nonprofit because if you go to the next stage down, which is the bottom of the pyramid, there must be of the how many the 1.9 million dollar 1.9 million nonprofits, right? If you take middle market and top of the market, what's the numbers there? If the whole market is 1.9 million, huh?
Well, the biggest, right? The biggest are universities, right? Who have these epic, right, endowments and different things. So I think that's why we're targeting small to mid-size, which we're defining as under 25 million in securities and savings. And so what I do know, the data point I do know is
So
that
you're not just middle market, you go all the way down to the bottom.
I mean, we're like for true scarcity mindset, you have to pay for our services. So some of them we can't do.
Okay.
But yeah, we serve. That's part of like our mission alignment. Is yes, we want to go mid market, but we serve all nonprofits. You can work with us if you are willing to spend $99 a month.
And who did you think at the time when you were given this pitch deck, who did you think was really going to be your market back then? Don't prejudice what you learned. I want to know back then.
I'm trying to remember, but I'm pretty sure it was always small to mid-sized nonprofits. Like that was one of the first data points of looking at the total
Like how big
addressable.
would that be when you were thinking in your own mind how big that might be? Forgetting the graph on your pitch deck, you know, what did you have in mind that these are the kind of people I'm going to talk to?
You mean for customers?
As customers, yeah, as client customers, yeah. Like how
Oh
much
yeah,
would they
I mean,
have?
we would have gone after probably anybody under. Actually, I know I did, and now I'm appropriately embarrassed. But yeah, we definitely went after larger organizations. I probably did it based off relational opportunity, but we probably went after anything under 50 million. And then
Okay,
these
good.
days, I would tell you our real sweet spot is under 10 million on just who's
Okay, so
underserved.
50 under 50 million. So you were saying, so you knew I'm going to go big. I'm going to get money quick, right? Okay. So then what was the problem that you after your 100 calls of customer discovery, you finally got down to here's the problem in the market. They recognize they have this
It was
problem.
a lack, yeah, it was a lack of equitable access to good financial strategies and opportunities. The traditional banking system was not made for tax exempt entities. Actually, the banking system in the US, banks existed for more than 100 years before the first tax exempt entity even existed. So everything about their systems is not made to make it easy for tax exempt clients. So even something like opening a brokerage account, it's very, very difficult as a nonprofit. Getting credit cards, very difficult as a nonprofit.
Well, thanks for giving me these examples because I couldn't relate. I couldn't, it didn't make sense to me.
Yeah. Do you know what an FDIC sweep program is? Okay. An FDIC sweep program is where banks typically have FDIC coverage of $250,000 per account, right?
Right.
So you're like, you want your money safe.
That's the guarantee
Bank,
from the
right. Yes.
government.
It is guaranteed by the federal government up to $250,000 per bank per account. Like not per account, but per bank per person or per
Yes.
entity. So nonprofits then will often go, because for them that's very important, they'll open up 3, 4, 5, 6, 7 different bank accounts. So they
Got
are
it.
spreading out the 250K per bank. Businesses have that problem. Sweep problem. FDIC sweep program solves that problem because a sweep program means you have a network of banks where it's one account, but you are spreading the money over different banks, and it allows you to provide coverage up to maybe $5 million. So then you don't have to have 5 different bank accounts. You can have one bank account. It makes your
Okay.
life a lot easier. Business and retail clients have access to sweep accounts. Nonprofits do not, the majority of the time. So it's something that's very basic in banking, but is usually not accessible for nonprofits, particularly small to mid-size. So
So
for us,
you're talking to small to mid-size. Now I got it. So there's a number of problems,
yes.
okay, that you identified, okay, for this particular nonprofit market. So then you get to who had the problem within the nonprofit. Who was the person that you would actually have to talk to that owned the problem
Mm-hmm.
in these small to mid-sized nonprofits? Because that's the other thing I always ask is like, who are you going to call? Because you can't call an entity, you got to call a person. So who are you going to call?
Our ideal customer profiles.
Back then now, don't get confused. I want to know back then.
Our ICP is varied. I feel like it was still a complex issue back then. Now we're just more confident that it's complex. Maybe in the very early days, I would have said
What's
CFO.
ICP? What's ICP, Miss ATV?
Wait, what? Your
What is
ideal,
ICP?
ideal customer profile.
Okay. Ideal customer profile. Very good. Okay.
So I would have said director of finance or CFO probably back then.
Okay. And then what was that person willing to pay? What was your assumption that that person was willing to pay to solve this problem that you solve?
Mm-hmm. The Common Fund Institute did a study that showed that nonprofits who have under $25 million in securities and savings on average pay 1.36% in advisory fees.
Okay.
So our premise was that you could use technology and have a whole platform that was built for them to streamline all the complex compliance requirements and almost have it be more like a Wealthfront or a Betterment, and we would charge 25 bips. So
And you
0.25% of assets under management.
so the 1.36 and the 0.25, tell me the difference between those. The 1.36 is
The
how
1.36% is what nonprofits were currently paying in advisory fees.
got it.
Our original deck, gosh, for everybody listening, I'm like, this is not what we do right now. But you're making me go back. So
I
like,
am. I'm making you go back.
no, the internet lives forever, Charlie. But our first deck was 25 bips, so 0.25%. So a fraction of what nonprofits were currently paying, but very in line with what Wealthfront and
So
Betterment were.
you were going to do the same advisory type services and you were going to do it for basically 20% of what the market was already paying.
Mm-hmm.
You were going to be, that's okay, great. And then
But
you
we don't
get
do
down,
that now.
I'm not, well, we're going to get to that now. This is what it is. This is what I just want people to understand, because when you're giving that pitch, as an entrepreneur is giving a pitch, it's like, I just know this is right. I just know it's right.
Well,
So then,
we were looking at Wealthfront and Betterment, right? So we were like, all right, we need better access. Like we can do banking one day, but let's start with investments. We can build a robo advisor. So it was a robo advisor for nonprofits, and that robo advisor's 25 bips roughly is very normal. It can go up to 50 bips.
okay, so you were going to the robo side of this thing. Okay, good.
Yes,
So
the
then
original premise was
then you say,
building.
okay, so then I say, well, how are you going to make money? Now we got it down to the 25 bips, okay, which is basis points, okay, that we're talking about there. So then you got to get to an economic model. So how do you got revenue, you got expenses, and you got profit. So how was this business? How did you forecast that this business would make money in that initial pitch?
Owning too much of the market that we never would have done. So I think the original premise, right? But if you're fundraising, that's what you do,
I
is
don't
you have
want you to feel embarrassed about this. You're no different than
to.
every other entrepreneur that was out there in their initial pitch. But go ahead.
Well, yeah, and I've done like I was on the receiving end of pitches, and you're like, do the hockey stick, but then if you try to be more in reality, you don't do the hockey stick. Investors don't want to see that either. So everybody I've been on both sides, so you just chuckle because I'm like, this is the game we play, right? But yes, I was like,
So
ultimately,
what
here's
was your forecast? What was your forecast
I
in
don't
that first
remember.
day? Huh?
But it was the premise is that we could be $1 billion company because when you look at the market size, even if you look at the small market chunk of small to mid-size under 25 million, that for us to look at a $530 billion market and say we could manage, what, 10% of that of the market, 5% of the market and still be a billion.
And so that was your forecast that you were going to get these bits and bits and bits and bits and bits. And then by the end of 5 years, it was going to be,
Mm-hmm.
you know,
Yeah.
whatever, some big number, right? You'd be a $25 million company in 5 years or whatever it was, right?
Probably. I always had a little bit of a longer play, but it was probably like 7 years. Yeah.
Okay. And the number was 25 million or whatever.
I don't remember the exact. I truly
Okay.
don't.
All right, good. So then you start making this pitch and you pitched David, okay, and he wrote the first check, right? And then where did you go after that? I mean, like you said, you knew a lot of people and a lot of people knew you because of your high profile at ATV. So
I
you had a leg up in that people did know you and you might have been pitching a new idea, but they knew Karen. That makes a big difference.
I think I had a lot of relational equity and I had earned respect from folks in the community, which probably opened those doors and made it a little bit easier. Definitely pitched, right? And did the pitch deck and then took lots of calls and conversations. Those early days, I actually have a lot of successful entrepreneurs who are on my cap table. So I have Kyle Porter with Sales Loft. I have Eric Spett with Terminus. I have Craig Hyde with Rigor. And so I think a lot of those successful entrepreneurs, Nick Santora with Curricula. And so I think a lot of those folks were coming alongside.
How did you structure the deal? Who helped you do that? Did you have a lawyer that helped you do that?
Mm-hmm. Yeah, we did a priced round.
Good.
Not a lot of people do, but we did a price round. We had to get investment partners. So on like investment advisors who had a lot of experience. So I serve on boards and some of those people from the board, like the board of trustees at Berry College that I'm on, several early angels came over from there. I think 4 or 5 actually came over from those relationships.
How do you price ideation deals? How did you price your deal?
I mean, at a high level, right? It's like, how big is the market? How good is the idea? And mostly, do we believe the entrepreneur? Like, are they committed? Will they figure it out? Like pricing pricing for some, the 25 bips, I literally can think of some VCs in Atlanta that were like, Karen, it's not scalable. And I'm like, I know, but we'll figure it out. Like, it's like, we're literally
Yeah,
so
so my question was, how did you, is this something that you're reluctant to share? Is how did you price that initial round?
no, I think it was looking at what the going market was and in fintech, and then looking
That
at
makes sense.
market
So,
size, and then having something that David agreed with. And then Atlanta Ventures wrote us a term sheet. And then once we had the term sheet, we invited other angels in on those terms.
right. Okay. Great. Okay. And it was just straight away common stock, or
Yes.
so they held the same stock you held? No
I don't know.
preferences, nothing like, you don't
I don't
remember?
know, Charlie. We're going way back. So I'm like, I've done 4 rounds of financing now. So I don't want to miss.
Okay, good. So now let's do this. All right. So let's go through this again then. All right. So now we're 4 years later. Okay. So now we're talking to Karen, the entrepreneur who's just left her job
Confident now. I'm
and
like
put it
trying to get
together, right?
over.
And now, yeah, 4 years you're
Well,
sitting there day and night talking about the same market and the same people and everything else. You've
in
been
an
all over this market.
entrepreneur, yeah, in an entrepreneur's world, 4 years is like easily a decade, right? The learning
Easily.
curve is high.
And if you don't believe that 4 years for an entrepreneur is easily a decade, just ask their spouse. Okay.
Yes. The highs are high and the lows are low.
Okay. I'll give you that. So now let's go back again. Now, today, who is it that you actually serve?
So we still serve growing nonprofits, small to mid-size. We are targeting under 20 million in securities and savings
Okay.
with
So
a
you
real
went from
sweet
50
spot.
million to 20 million. Now you know this is my ICP. Okay.
And honestly, the real sweet spot is the 1 to 10. We're seeing that. But as we grow, that number will continue to
I
grow.
get that. That makes total sense. As you go, you become, yeah, exactly. Okay. So that's who you serve. Okay. But when you see one of those 1 to 10s, you go, man, we can talk to that person.
Those convert pretty easily.
Yeah. Right. There you go. Okay. So now the problem that you had outlined, which was this problem, I would state it as nonprofits have a different set of problems than for profits. So what is the problem that's the big hook that when you say, I got one of the 1 to 10s, I'm talking to them, what lands it?
I would say part of the movement is because now I'm like, oh, what we're doing now. Part of the movement that we did was that we started very, very narrow with investments, right? We were
Okay.
like, great. At the time, the market was up, right? We're like, they don't have brokerage accounts. No one will let them invest. All they have is banking. They can do a CD or a savings account, and that's it. And the market was going gangbusters for a while. And so it was scaling. And so we were like, let's start there. We got our first 10 paying customers, the market tanked. And we were like, oh, that's not great timing. Or will we survive?
So you promised them a certain return?
Oh, you can't promise returns.
You can't promise a return. So they had an expectation of a return, even though you didn't say anything, but it was going to be better than a CD. Okay. What happened when you say the market tanked? What actually happened? What kind
Right.
of,
And just for everybody, we are a registered investment advisor for
okay.
nonprofits. So we're a technology company, but we're also a traditional RIA. So that gives us that fiduciary. So we are advising and then also have the technology platform to support all of that and streamline the operations. So that being said, the market tanked a lot harder, which is a new registered investment advisor. It was already incredibly difficult. I was not very good at it, selling it still. And so I think there was an element of we were like, oh, and then we were like scraping by and we were bringing people on, but it was slow and painful early days. And so at the time, though, fixed income started getting, and we were watching other companies again sell to businesses like Meow and other folks who were just doing treasuries. And we were like, why are we not offering fixed income like treasuries, money markets, things like that?
That's when interest rates started to move up in the last couple of
So
years.
we rode
And that
that
was
wave.
dramatic change where the
Yeah.
Fed
So
was
we pivoted.
changing it every day like
So
that.
it's not like a pivot, but we quickly had to add on, which just required a build. But at the time it was timing. So then we added on all of our fixed income. So that's money markets, treasuries, and then we are very competitive towards banks. So we have growth strategies and investments for longer term and endowments, but then we started doing a lot of what we call cash management, and that's more fixed income. That was quite helpful. And then as we continued to grow, that was pieces of the brokerage account, right? Brokerage account allowed you to invest. A brokerage account for a nonprofit now allows us to do money markets, mutual funds, things like that, treasuries. And then from there, we were kept getting where it started was the pain point of receiving stock gifts. I need a brokerage account. No one will hold one, or I have to have $1,000 to have this, and there's still fees, but we just want to receive a stock. And we're like, great. There's tech solutions, but nobody has the deep vertical we have where they are also opening the brokerage account. And we knew that because as soon as we opened, they were coming to us and saying, how'd y'all solve this problem? And we were like, well, we're an RIA and a tech company, so we can solve that problem from the ground up. So we added our SaaS product, and that allowed us to also do a monthly fee in addition to our AUM, and then we do a small transaction fee as well. So now we started selling across the way. So that was a long-winded answer of like, started with investments, market tanked, pivoted, wrote into fixed income. That was the market was favorable in there. And then we added the SaaS product. So it's become
but the short story to the long story is simply, there's just no way when you put that first pitch together that you're going to know what really is going to happen.
Of course
you just have to sort of get on the train and get it moving. And once it's moving, you're going to go where the need is and where the money is. Okay.
Customers tell you where to go because if they will pay for it, then you know you're onto something, right? And it's not that where they're asking for features. It's
everybody write that down. If they will pay for it, then you know you're onto something. My God, that's the you want customer discovery. that's when you know you have something.
A lot of people would be like, Karen, before you raise money and hire engineers and build this, like MVP it. And that's part of why I did so much customer discovery. You can't really MVP finance.
No.
Right? Especially financial technology. Like that is an expensive venture to do.
So then get to this. And then you get to, so who had the problem? Remember you said, who'd you say was going to be the finance director or something?
Oh, and director of finance.
So who had the problem when you find, like today when you're working on it?
So our ICP.
So I got the 1 to 10. Who am I talking to that you go, oh man, we're gold now? Okay.
I would say we probably talked to those folks 40% of the time.
Okay.
The other 60% would be board members, investment committee members, executive directors, or development officers.
Wow. How about that?
But it's a nonprofit. So there's a reason why nonprofits are hard to sell to, right? Is that there are a lot of key stakeholders. So the solution of.
And you did you know, but you didn't know that on the way in. You really get an appreciation for it as you began to sell.
Right. I mean, I understood nonprofits. So like when I ran a nonprofit, I was the executive director and we had a bookkeeper. I didn't have a director of finance. Right. So depending on how you were doing that, it adjusted based off size and how your organization ran.
Great. What did you learn about what will they pay to solve the problem?
Mm-hmm. Oh, and we definitely did not last at 25 bips for very long. We are 65 bips. So 0.65% of assets under management annually.
How did you come to that?
Trial and error, as with all pricing for entrepreneurs, right? We are still like less than half of what traditional, so it's just under half of what the big study that showed that most nonprofits are paying 1.36% advisory fees. So we were just under that. So we wanted to be that really good solution where you can do a Fidelity account and talk to somebody, but you're probably still paying 50 bips and they don't understand nonprofits. You're not getting dedicated service. Like there's a lot of things about that. So we were like, hey, we can be between the advisors who don't really get you, but they're going to charge a lot or the DIY. And so we were able to streamline a lot of that, but they still get a dedicated advisor. We do quarterly board reports. We do market analysis. We do annual end of year audit support.
What was it beside price? Okay. That you were half what these bigger advisors would charge a nonprofit to manage their money. What besides?
We're made for them. We are the only.
That's what it is. We are all about you. We understand you like no one else understands you. That's basically your pitch, right?
Yes. It
Okay.
is a vertical.
We talk your language, we understand your problem, and
People
that's how
talk
you
to
win
us
those
and they're
deals.
with traditional banks or advisors, and they're like, Karen, we learn more from you and your team in the first 30
I
minutes
bet that's true.
for years. Because that's where I think my board experience and being executive director
How
and a
long did it take? How long did it take before you had that confidence? We know you better than anybody else. And the market started to come around to say, you know, you should talk to Infinite Giving. And when I'm talking to another nonprofit person at some sort of conference or whatever, I say, you should talk to Infinite Giving. How long did it take for that type of a referral, that kind of recognition of credibility for that to happen? How many years did that take?
probably about a year and a half.
That's it.
I
Really?
mean,
Okay.
to begin, right? Well, clearly, the amount we see now is very different than those early days.
Okay. So when did it happen that it was like surprising you? In other words, more's coming in without you making calls than with or without your marketing, that your email marketing and whatever campaigns that you have. More's just sort of coming in it through the transom is what I call. That's when you know the market now knows we exist. Okay.
Our business is unique, and that is how we've gotten almost all of our leads since day one.
Isn't that something? But
So
there must have been if you put on if you put it on a graph, you're kind of moving along, you're going up slowly, and then all of a sudden there was these blips. Not bips, but blips, okay? And was that a couple of years out or 3 years out, or was it year 3? Let me say that.
ours was pretty early. We started SEO early, and there
Okay.
is a wide ocean where nonprofit financial expertise is not really tapped into. Finance people don't understand nonprofits, and nonprofits don't understand finance
Which
people.
is why I didn't invest, okay? So
Right. But that's true. A lot of VCs are like, I don't understand. And I'm like, like your life is so different than a nonprofit leader. That's why more of y'all should serve on nonprofit boards. So then you start to understand. But I think it is once you kind of understand that. So we have never had a full time outbound salesperson. We don't do BDR in the same traditional way.
well, that's
It's been
great.
people finding us, and we are onboarding 3 to 5 new orgs a week. And we've never done like cold outbound calling or anything.
Well, you made a comment. You said the last thing I'd say is, so how did the economic model work out? Is this a business that is sustainable now or is heading in the near term to sustainability? Because at some point you got to make enough profit to keep you got to make cash flow to keep yourself in business. You become
We'll be profitable
self-sustaining.
within the year.
Okay, great. But you said you had 4 other fundraisings from that initial one?
We did 500,000 to build. So
Yeah.
we built because our product's only been live on the market for 3 years. It took us about a year to build. So we built, became a registered investment advisor, compliance, had to go through that whole very painful process in order to launch. So again, high compliance. You cannot MVP what we did. And so after a year, we launched our first 10 paying customers,
Yeah.
and then did another $500,000 round.
Okay.
And that helped us continue to grow and actually be like, all right, we built it, we did it, we got our first 10 paying customers. Let's like scale. And we did, I stayed lean, right? So it was like testing.
Yeah.
And then we were going to raise a seed round. We probably had, I don't want to throw out a number and have it be wrong, but
Okay.
and then we did another, and then we were like, okay, I think we can do a seed round. We've proven this out. We've got repeatable revenue. People are coming to us, like it's starting to go. And we actually got, like, they gave us a $2 million term sheet, and we ended up turning it down. Just looking at early stage where we were like, oh, like money's good, but also I feel like we were just starting to prove it out. We were just starting to build out our SaaS product. Connor and I were like, I'm my co-founder, we were like, let's hold, right? And turn this down and do a small. So we did like another $500,000 just to be like, we think if we punt this, we can do better. And so we punted it, did another little angel round. So in these days, you can call rounds whatever you want. So I was like, oh, friends and family, pre-seed.
No, I
Or
get
I
it.
said angel round, then a pre-seed round. And then we waited, and I'm so glad we did. And so we did a seed round this fall. And we had Morgan Stanley was in on it, Cubic Capital, Atlanta Ventures again.
How big a round was that?
That was 2 million.
Wow. So the total.
We could have raised three. I turned out another $1 million recently too. And so I think a lot of it is our traction. We have a really nice hockey stick, 140% growth year over year. Again, that with little outbound. So it's really sticky. We have a 96% retention rate with our clients. And those who have rolled off have been because they don't exist any longer as an organization. And so we've really solved a pain point, and they can come in and we're modular and we can serve them in different ways. And then we cross sell. So about 75% of the stock gifts that we receive through our platform are reinvested through our platform. So there's this really sticky cross sell and easy onboarding, and people are happy. So we're
And you're
growing.
happy. Look at you, how happy you are.
It's nice when it all
Congratulations.
starts to work.
This is fabulous. So in total, two, three. So you did you raise like 3.5 million? And so now you're going to get to profitability. You also, not only do you have as your revenue source, it has expanded. It's beyond just the 65 bips. You also have other revenue sources. And what are those? That one
Yeah.
is
So
the SaaS
about
product?
probably a year and a half ago, we launched our donation page, which is a SaaS product. And then there's also a transaction fee.
And there's a
We have
transaction.
3 revenue streams, and then we also cross sell into those other revenue streams.
And in the original pitch, you didn't have any of that. You had
No, those didn't
25
exist.
bips.
Yeah, so we started with investments,
And then
market
that's how
tanked, pivoted into fixed income, and then added a SaaS and transaction fee. So we're still who we are at the core. There wasn't a lot of changing, but how we're solving the problem, the ways we're solving it, the layers of it has definitely shifted. And a lot, I mean, it's all been customer led, right? It's data collection,
beautiful.
it's requests, it's conversations, and then making sure that we're serving them really well. And for us, it is a huge opportunity to amplify greater good, right? So we are for profit, but we are very mission oriented. We love the people we serve, and being able to know that if we're helping these nonprofits be more financially sustainable, then ultimately we're helping create a better society and a better world.
What do you hear when feedback from customers that just literally tickles your ears, if you will, that you say, wow, this has been, you sit down with your husband and you go, honey, this was a good day. This has been worth it.
Well, closing new deals always feel really good. But I would say where we get thanked a lot. We get thanked. Like, I still do a lot of our demos. Right now we have a whole team. People are handling lots of different things, but I still like to do demos. I don't do very many. I usually try to do at least a couple a week.
Yeah.
And it is not uncommon for the prospect on the demo to thank us. I've tried everywhere. We're doing this, but it's over here and they don't understand us, or they can't do this, or I don't meet this requirement, or I can't do that, or they're telling me it's going to take 3 months to do this. And they're like, you can help me here and do this. And they immediately get it and they love it, and we get thanked. And that's a beautiful thing. And because it is an underserved community, because a lot of people just disregard nonprofits, despite the fact of their incredible impact and the important work they're doing, and not out of malice, but I just think most people don't understand. They don't always understand how it all works. And so for them to be able to
The other part is they're harder.
Mm-hmm.
They're harder. Okay. So if I'm making money doing the easier, why would I choose to do the harder? Which is also a competitive advantage.
Yes.
Okay. That's a pretty high wall to jump for somebody to come in and all of a sudden say, look at them, they're doing well, we should go there. That's going to be a tough pitch to their boss to say, boss is going to say, I'm not going there.
Our competitive advantage is that they have a founder with a lot of personal expertise. So I can speak to that. Our mission is that, who we are as a company, our culture, our language are around that. It's also that we chose the most difficult path of technology and an RIA, because that allows us to be a fiduciary, allows us to have conversations, and we are relationship oriented. So we do not separate that. And that we were built for them. So it's a very specific vertical in who we are coming alongside. And I think everything we do reflects that. And it's category creation too. So what we have done at a high level, you can look at what infinite giving is doing and you're like, none of this is rocket science. Some banking, money markets, investments, like donations, all of that has been done. It's actually incredibly innovative, which is why we've been on the NASDAQ. That's why we've been, recognized by Forbes as one of the, most innovative companies in the US. Georgia's top 40 most innovative companies. So we've gotten that because what we've done is we have come alongside them and created a category in which we're helping them receive donations, manage their donations, and invest their donations. And so it's a little bit of banking, it's a little bit of these different tech solutions, it's a little bit of investments, but it's bringing it all into one kind of financial operating system that makes their lives easier.
But it's also speaking their language.
Yeah.
And that's a huge part of it.
Yes.
Having a heart for them and understanding their problem literally at a seminal level, So when they talk to you, it's like finally somebody in finance who knows what I'm talking about and really understands my issues. That is so valuable. So what when you look at your growth projections, is there what's the threats to you that could just continuing to grow and amass more and more of this nonprofit, managing bigger and bigger, more and more money from more and more nonprofits for bigger nonprofits, okay? Which is where you have to go eventually. Yeah. So what's the threats to that? What do you think? Oh my gosh, this could this
Yeah. I think a lot of the biggest hurdles we've overcome already, like in our
okay.
first, 3 or 4 years of like going through compliance and like pivoting with the markets. We've had several big market adjustments. 2025 has not been helpful for any nonprofit or finance for nonprofits, just with lack, a lot of things coming out of the administration with decreasing funding, removing funding, instability, the market ups and downs, threats of a recession, like everything about like 2025 for nonprofits.
There's so much that's unpredictable. It freezes
Yes.
everybody in place, right?
Correct. So it's hard.
Okay.
I mean, even, traditional businesses feel that too. Donors feel that. And then of course we sell to nonprofits and manage funds. So it's like we have reserves. Great. All your funding got cut. All of our reserves go out. Or we don't want to restrict something, or how do we think about this? Or we lost money in the market. I'm like, all right, we'll do T-bills, fixed income. So we're always adjusting. But I think there's policy shifts that impact us, but we've already like proven like we've continued to grow despite that, even in 2025.
What about is there a threat to the donor base? In other words, has have don if
I
with
mean,
the
giving
war
is
that's gone
already,
on, donations have gone down too, have they not?
absolutely. Yeah. 2025 is not helpful for nonprofits.
Like what percentage has that fallen off?
We actually just released a data report a couple weeks ago, but it is significant. I don't know. I think it's around 20% down.
Yeah. So I think, and I've heard that from some of the nonprofits that I support. And so if anybody's listening to this who's a philanthropist, don't do what a lot of people are doing, which is holding back funds. These nonprofits need the funds today.
Mhm.
Sitting on it to wait for something to clarify isn't going to make it better.
And
Okay.
often that's the pitch for nonprofits is like, okay, we're worried, we need this. Well, let's take money sitting in your checking account or a low yield savings
Yeah.
account and put it in a money market mutual fund or treasuries, right? Low risk, where we can now get 4 to 5% versus getting, 0.01% in your checking account. And
Here's
that's
a
a lot of what.
question that has nothing to do directly with your business. Okay. This has to do with these donor advised funds. These donor advised funds are sitting literally with maybe $1 trillion. So
It's
it's
several billion.
money, huh? Several billion. So it's money that has literally been given away. It is not on my personal balance sheet anymore. It's in a donor advised fund and it's waiting to be given away. Why does that money sit there year in and year out? Okay, such a high balance. Why is it not distributed?
Oh, Charlie, I have lots of big feelings about donor advised funds. And I actually know when we were fundraising, a lot of VCs are like, what do you mean? I have my donor advised fund. It's all so easy. That's not a problem. And I'm like, okay, well, I'm not selling to you. I'm selling to nonprofits. So donor advised funds are wonderful for donors. They're great. They're great vehicles. They're very easy
They're
to set
efficient.
up. They're
Yeah, I get it.
tax exempt, right? If you have a big exit, you can put a big money. And then a donor's premise is I get my tax exempt, savings on there. And then I have this earmarked for philanthropy. And I get to decide whenever I want what I want to do with it. Nonprofits are sitting here going, we're doing,
So why don't they decide?
because you got your benefit when you put money into your DAF. That money is no longer yours.
I get it.
Nonprofits are over here desperate to say, how do I get money out of the DAFs and into our hands? Donors have to then make the request to the DAF and say, hey, DAF holder, hey, NCF, I want to pull money from here to go over to here. Will you approve this? So it's not hard, but it requires you to go in there and enter all that proper information. And then it requires the DAF. It's their money. It is no longer your money. That's why it's called a request. And then they can approve it and then decide. So there is friction on making that request, and nonprofits have no control over that. And you actually have less control over your DAF than you think you do. What we're seeing now a lot is that DAF holders are not leaving them in their wills. And so when you pass, that third party, Fidelity, whoever it is, that's their money. So all of this money, yes,
No.
yes.
Wait,
You have given,
now I deal with NCF, National Christian Foundation.
you gave
They
your
will give
donation.
that money away if it's not.
If that is in your direction, it is.
And if it's not, it's their money.
It is already their money. When you got a tax
I
exempt,
thought about that.
you got a tax exempt donation because you donated to NCF. You donate to the community foundation. You donate to a donor advised fund. A donor advised fund is
If it's not my money, how do I leave it in my will?
it is a third party investor who is making money off you. So they are charging you an AUM fee. They're making money. They are for great I don't want to throw they serve great purposes in our community, but I think people don't understand the semantics of donor advised funds. So what's happening is they own your funds. You can make requests.
Yes.
Right? If you're not making requests, the money sits there. If you pass, the money sits there. Now they can choose to do with it what they want, but it is no longer your money, it's their money. So if we assume the best, right, which I prefer to do, and you assume the best, then you say, eventually there will be a cause, but there is a natural tension there because they make money off the money. So they cannot, you know what I mean? There is not a lot of motivation for them to have urgency on disbursements. There is no urgency on the donors to do the disbursement because you already received the benefit. There's friction in making that.
It's funny. The one thought that I have, and you've learned a lot on this conversation, but having had a DAF for, oh my God, so it must be, I've had a DAF for 25 years or more. Okay. But it's the thing that I see in dealing with, I went to an NCF conference on giving, at a beautiful hotel. And
NCF has $13 billion of donor advised funds.
Right. And the whole thing was give money, give money. The whole conference was all about getting families together, make sure you're giving your money. They're really trying to get it out. But they know based on history, that a certain percentage sort of comes in every month. And I mean, every month. Yeah. And every month a certain percentage goes out. So they know what it is. I mean, it's all predictable. But the thing that gets me is I always say, and this is the friction I see, is people who have the gift of making money do not have the gift of giving money. They think this way, make money, make money. Once I get the tax benefit, I don't want to spend time over here on how to give it away. It's gone anyway. So it's really this psychological issue because I'm too busy making money and I don't want to spend money giving money. So it
and
really
the person holding the money is not motivated to do it. And there's great intentions, but there's no legislation. So there has been bipartisan legislation that's been attempted to pass, and it does not because there's billions of dollars at stakes and there's a lot of powerful people at play.
Isn't that something?
But foundations have to disperse up to 5%. DAFs do not. There is no legislation.
We got to think about this together sometime, and we need to.
This is why so Infinite Giving, part of what we do is we help give the nonprofit the tools to ask for the donors to give from their donor advised fund. We make it easier for them to pull it. And what we are trying to do is change the conversation where we can go to a donor and say, make the gift directly to us. You get the same tax exemptability. We can set up a quasi endowment, a legacy fund. We give them all the infrastructure to where we can give you the same kind of impact over time, but it is in the nonprofit's hands and they're benefiting versus a third party holder.
I love it. I love it. I
Yeah.
love it. And that
I
makes,
didn't know we were gonna talk DAFs, but yeah, I got lots of big opinions about those.
yeah, I get that. It's funny too that, and this is a whole nother issue because I'm dealing, my son has a business that is in the social impact area, and DAFs are actually investing in his business by giving loans and things that get paid back. Okay. Because he's a for profit. It's just, you sit there and like, how did they even get to that?
We have some angels who invested through impact investing, Impact Foundation, which will do that.
Like,
So yeah, it's a whole thing that I feel pretty passionately that there should be some legislation around it
okay.
just to help make sure the money gets to those who need it most.
So did we answer the question? Did you answer the question of what threats that you have as far as growth goes?
I think there's policies, there's markets. We're pretty defensible. That doesn't mean there's not going to be
Well,
other
it's pretty
people.
big. It's the big things. It's the outside of my control things.
Correct, which is how it always is, which is why there's
Yeah.
always a bit of luck that's required to be successful.
Yeah. Okay. Then the other is, and I'm kind of winding this down, but just a couple more questions. One is, if you could remember back again, post conversation with David, where he told you you're going away and you're going to be on your own, what was your vision for Infinite Giving then as the founder?
I wanted to build an impactful company that would create a lot of good, both for the people that worked for it, for key stakeholders, but that would have a ripple effect of good for the clients that we serve. And so that's the premise. Can we build a really good, sustainable company that's making a positive impact? The answer is yes. So then the other questions are more like how do we do that? What does that
Yeah, I
look
get
like?
all that, but so if you go back, that was the vision back then. Now you're 4 years in, and has the vision changed? Has it expanded or has it stayed the same?
I mean,
I love that you said, I really want to build a company that's going to have impact, make people's lives better.
there's a lot of metrics that we can use, and we've talked about, I mean, how much in donations have we processed for our nonprofits? How much?
But I don't want that's not vision. That's metrics to vision. Is the vision itself changed or has it just basically stayed the same?
It is the same.
It is the same. That's beautiful. That really is. So is there anything that keeps you up at night now as the founder and CEO of this just about to be profitable company that's growing at a very rapid pace at this point?
I mean, founders always lose sleep at night.
On what? Like, what's the big thing that you find yourself and keep revisiting that you go like, oh my God. And then so it's in God's hands anyway. So I don't need to release this, right?
I mean, I think you have to have a certain belief in what you're doing and persistence to sustain, right? Like even when I was starting this, I was like, hey, this is a 7 to 10 years. Like I'm dedicating my entire decade of my 40s to building this company, and who knows what'll happen after that. But like I approached it in the 7 to 10 year game. And so when we look at that, right, we're 3 years in the market, 4 years, like I'm roughly at that halfway mark. And so a lot of it is really wanting to make sure that the decisions we're making now are going to benefit everything that we want to achieve in the future, right? So there's a lot of like, will they, won't they? Is this the right hire? Is this the right product feature? Is this the right partner? How do we scale? Do we want this investor's money? Do we not want this investor's money? Which clients will we serve? We are part of the Praxis community. If people are not responsive, if they're not familiar with Praxis, it's a faith-based organization. They're actually a client of ours now too. And we went through their accelerator program, and they work with capital folks and entrepreneurs and nonprofits. And one of the things that I love is that they really give a framework on how to build what they call a redemptive company. And for us, the idea is, right, you can have an ethical company, right? And an ethical company is trying to do the right thing, right? And you are really looking at like, I win, you win, be good, do good, like do the right thing. Well, there's also an exploitive company, right? So if you go on the other side, it's a take all you can get, I win, you lose, like it's about winning and control. Most people don't want to do that, but a lot of businesses are exploitive. So then you think about an ethical company. And I think for us,
You mean a
that's not.
redemptive company?
Yes, we want to do a redemptive company. So it's
Right.
looking at how do you create restoration through sacrifice to bless others. So it's more of a I sacrifice, we win. How do you love and serve others who are connected to infinite giving? How do we love and serve our clients? How do we love and serve the people who work on our team? And the idea is we can create, restoration through sacrifice for the greater good. And so for a lot of what we do, it's a lot of prayerful consideration about how are we building a redemptive framework. And for us, sometimes the sacrifice there is about who do we want to serve and who do we not serve, especially when you're a startup. Like we have turned revenue down because perhaps that was not mission aligned. And that's a tough conversation to have, but it's something that I think most founders struggle with is like, what kind of culture do we want? What kind of company are we building and what kind of impact do we want to have? Because every decision you make along the way is breathing life into that, either intentionally or unintentionally. And if you don't keep a really close wrap, it can get off the rails really quick. And then all of a sudden you're looking back and you're going to say, how did we get here? So what keeps me up at night is making sure that it is an intentional path, building the type of company we want to build.
Beautiful. If that's what keeps you up at night, what gives you, this is the last question, is what gives you sweet dreams?
Being a parent.
Being,
Being a parent, yeah, being a mom.
oh, there you go.
We're going to go. I always say, like, you should be able to bring your whole self to work. And so, sweet dreams of like, are we building a beautiful company? Are people happy? Are we serving them well? Are we doing the right thing? Are we sacrificing for the greater good? Yes. But like, what is the most important role in my life? It is being a mom. And so, and there's tension. I miss out on moments at home, and my husband does all the cooking, right? There's a lot of, I think, role sharing and different things that we have a partnership at home, which gives me the ability to also run a company like Infinite Giving. But as much as I love the company, it's a huge part of who I am. It is not my identity.
So never forget, when you're an entrepreneur in the midst of all this with investors and customers and growth and the ability to do good things for a lot of people, never forget who you are. Never forget who you are. And it's so easy to have people tell you who you should be, and you try to be that person. And I have such great respect for you. You never let that go at ATV when I met you, and you never let it go in this business too. So congratulations on doing such a fabulous job. And thanks for giving me all this time. I hope people listen to this.
Anybody is going to watch an hour and a half of this, Charlie.
But I'll tell you what, here's what we're doing. We're saying the idea, when I started this, I said, we're going from idea to reality, what you learn once you start. And that's what I try to pull out of you. And you have so many good lessons here. We start so idealistically, having we're 89% idealism and 11% reality. And now, I put you at 50-50. You're still very idealistic, which is great, but boy, that reality came in, and that's getting you to sustainability. And you've got such wonderful partnerships and great investors. So I'm so impressed. You always impress me. Okay. And I'm leaving this call feeling awful that I didn't invest, because I should have invested. And God bless all those men and women that did invest in you. And I'm glad that that's there. So sorry about that one.
No, I'm honored to count you as a friend, Charlie. And over the last decade plus, we've known each other. I think moving alongside in the ecosystem and building relationships is something that I admire a lot about you as well. So always happy to give you time and get to spend time with you as well.
Well, thanks. It's funny how this came about, by the way. Just got one of your emails, and I said, Karen is so good. She must have a great story. What she's learned over these 4 years. And you certainly didn't disappoint. And I hope, and I'll tell everybody out there, we'll wrap this up. I hope that you're not disappointed either. And I hope you listen to the end where I say, thanks for listening. And you got great benefit. So thank you very much. We'll see you next time.